Don Houser, welcome to Cape Coral Investor Network. One of the reasons why I wanted to speak to you today is because the very first step in getting a real estate investment property is obviously getting a pre-approval and knowing what you can afford from a real estate investment perspective. Don, how are you doing today?
I am doing great. Thank you for inviting me.
Absolutely. Well, as you know this, you are our preferred lender when it comes to particularly the resale homes, the duplexes, single family homes, and on up. And one of the first things I do when I have a conversation, I ask right away, hey, do you have a pre-approval already? If the answer is no, I send them a text message. Don, can you carry on from that step when you get a message from me saying I have a buyer interested? What happens next?
Okay. Just to give a little bit of background real quick, I have 15 years of lending experience. So that will always help me kind of navigate the conversation to whatever that investor might need. So when I start out a conversation with somebody that's interested in getting pre-approved, I normally ask them, what is their level right now of investor? Because you might have a investor that's just starting out. You might have somebody that has a small portfolio, and sometimes I have people with 100 homes in their portfolio. So I always have to figure out where their level of investing starts, so then I can accurately determine where I go from the next conversation.
Right, and that's also very helpful for you to know because if it's their first time applying for a mortgage, then you want to make yourself more available to answer some of those common questions to kind of lay the roadmap for them. But if someone's on their 36th property, right, you can kind of just plow forward.
I think they're telling me what to do.
Pretty much, they know exactly what they're looking for and they know exactly what they have to accomplish. Now when it comes from the real estate investment perspective, 2020 was a very hectic year. A lot of activity kept happening. And as we go through the first half of 2021, the activity level has just picked up. I'm curious on a personal level. I know you just had your President's Club celebration recently. And what's it been like? How have you been able to personally manage the increased workload? And what's it been like on your end?
Okay. Luckily, the company that I work for, American Eagle Mortgage, we're a very well-established company, and we have employees that have been with us for a very long time. So I think that, first of all, has been helpful, that you know how other people work, your underwriters, your processors, your assistants, your closers. But we did had to have more staff. So, we were trying very actively, like many mortgage companies, to really pull in the best talent that we could, because it is about talent and it is about experience and having good personalities work with each other. So I think that's been the first thing. It's like we started out in lockdown mode, pandemic, everybody went into their closet working, and it was mass chaos for about 3 months. And then as things started getting a little bit more normal, or people figured out how to work at home, it just got even better. And with the increased staff that we now have, we've been getting through our loans in a very good time. We just have other things that we can't control. And that would be the appraisers getting out there, the surveyors getting out there. Here in Florida, if we have extremely bad weather, raining for a couple days, that will put us behind in some of our turn times. But the whole team is always staying on top of everything that they need to do in order to get the loan into a closing position.
Yeah, and one of the things that I appreciate from you personally is, for me, I recommend Don. I recommend you personally, but obviously you have a strong team behind you. And one of the things that I appreciate a lot is that you're local, you're active in the Southwest Florida area, and you know a lot of the investors personally. You take the time to actually get to know the areas, understand the mindset of the investors that are actually doing business here. I guess since you've been in the industry for several years now, what have you seen as being the trajectory as far as when you first started in the industry, and what are you starting to see more currently with regards to mortgage products?
Well, as far as starting out in the business, I started out at a big bank. So, I think that's always a great training ground, but they're always extremely limited in their products. If you don't fit into a conventional Freddie Mac, Fannie Mae loan with 6 months reserves and you can prove all your income, you have nothing. So that's one of the things that I've really liked is, first of all, Southwest Florida is my favorite group and organization that I belong to, I always tell people it's just a fun group all the way around, and people are always open and happy and want to share information. So that's always been a really, really important thing for me there. And then secondly, it is figuring out what product they might need. So if somebody might be self-employed, perhaps I'm going to use a bank statement program with them because they have excellent credit, they have money in the bank, but they might not show everything on their tax return. Or we also have what's called investor cash flow loans. And once again, these are not traditional banks. These are Wall Street money. You might hear them called portfolio. They are not hard money, so there is a difference there. But once again, the investor cash flow is just taking in the consideration of the rent that property might generate. So say the rent is $1,000. As long as the mortgage payment isn't over $1,000 with taxes and insurance in there, you don't need any personal income. So those are just ways to, perhaps start investing if you're limited in what you have for proving income.
Yeah, and you bring up a good point with regards to the differences between a traditional lender, which is a bank, and a mortgage broker. A lot of times these banks will say mandatory 45 days, right, to close. They only offer their own products, and they're less willing or able to be creative. Can you dive a little bit deeper into the separation between traditional banks and a mortgage broker?
Okay. So like I said, when I worked at the bank, I was only limited to a few things of product. So I hold basically two hats. One is a mortgage banker. So as a mortgage banker, my company has, say, 30 investors. It could be Freedom Mortgage, it could be Bank of America, Chase, Wells Fargo. So behind the scenes, we have all these investors that we would be searching for money for you and maybe writing to their guidelines, because people have different guidelines. Investors have different guidelines. So that's my first thing. As a mortgage banker, I shop the conventional. Hold on one second. Smokey.
What's your dog's name?
Smokey.
Well, Smokey has heard you talk on the phone so much that he has his own input. He was trying to like to add. Hey, Smokey.
Okay, I'm going to put away. Give me a moment.
Not a problem.
Smokey was confused about why I was standing here and not talking to him.
Right. I mean, you're right there. You give him something.
He's like, here's my toy. Okay, so going back to being a mortgage banker. So we have all the investors behind the scenes that we would be able to pick money from. So sometimes that's all in-house underwriting. So we control the entire process. So that would be our underwriters underwriting it, us funding the loan, that kind of thing. When we get into mortgage broker, that's my other hat that I wear. So we have places like Lenshore or Angel Oak that you might hear them talk about, brokering out loans. So we don't have as much control in a broker situation. So we're dealing with their underwriters, their closers. But it would be able to give us that opportunity to find the money that we need based on that guideline of a bank statement or investor cash flow.
Yeah, I think a lot of investors often understand how to purchase their first property for themselves, their own personal use, and they start struggling when it comes down to buying that second property and on moving forward. Can you walk us through what's considered when you're looking at allowing someone to purchase or lending on someone purchasing their second property? Oftentimes you want a lot of them look to buy it as a second home or as an investment loan. Can you walk us through kind of how those are split?
Yep. So a second home can also be used partly for an investment property. So that's something I always like to approach the client with. Is it truly an investment property, or you buying it to use it as a second home, which we do a lot in Florida, but they might rent it out a few months when they're not here. So if the primary purpose is a second home, then we can classify it as a second home, 10% down with a conventional loan, and be able to finance it that way. If it's strictly going to be an investment property, then we're going to want to figure out, okay, where is this property located? What does it qualify for? What does the person qualify for? So I'll give an example. In Florida with our condos, a lot of people like to buy these resorty type condos, but they become very difficult to finance because they might have daily rentals in them. They might have weekly rentals. And many of the investors don't like that condo-tel type feel. They want a real traditional condo that people are using for primary and second homes, not as a more transient hotel situation.
Right. And for me personally, I think that buying a secondary home as a way to transition into a market, like I know a lot of people from New York who are buying a second home here, and to cover their expenses, they're renting it out as a seasonal rental, but they do intend to use it actively. I think that's just ingenious. It's almost like a way to having one foot out the door.
Right.
And
You know, a lot of them strategically do set that up. They know that they're going to be retiring in 2 or 3 years. So they would like to start getting acclimated, find the home now. As you know, we have such a hot market here right now. So, you know, so many properties are flying off the market, but you know, people really, really love the sunshine. So they're willing to, you know, hey, it's a second home, and then offset some of that payment with some rental income, and then use it, you know, when they are, you know, not renting it out. But, you know, we really want it to be a second home feel, not just, like I said, as a condo hotel type situation. And then we also have a lot of short-term rentals, Airbnb type things. So those become a little bit more challenging because it's new. So traditionally, underwriting, we haven't had these short-term rentals that are days at a time. Even the portfolio lenders, it's something new. So they're still going to base any kind of rental income off of what a yearly rental would be. So when you're getting into something like that, you may get 3,000 a month in season, you know, when it's, you know, rainy, snowy someplace else in the world and there's sunshine here. But annually, you might only get 1,500 a month. So they're going to base it off of what an annual lease would be for a property to count any of the rental income.
right, and that becomes very important, specifically when it comes to refinancing. So if you do based on an annual lease, it's pretty predictable, pretty easy to figure out the mathematics behind it. As a seasonal rental, we have a very strong winter season, which is November through April, in which occupancy rates are normally a lot higher, at least $150 per day higher. And the rates are about 81% occupancy. So those are really strong numbers. They soften up a little bit more in the spring and summertime. But when it comes to refinancing, they're also treated differently, aren't they?
For the refinance, yes. If we are going to have a seasonal rental, we would have to have had a tax return for at least a year showing what that looked like for your year on your Schedule E. So it's not impossible. And I'm going to flip, I can't remember exactly which one it is, but I think it's Freddie Mac doesn't allow it. And I think it's Fannie Mae that does allow seasonal rentals. But you are going to have that history and what it looks like. And then with COVID, we have a whole nother problem. With COVID, they want to see leases. So hopefully once COVID's over, we can go back to normal, but they want to see, is it actively leased? Right. So they want to count that rental income showing it leased and your tax return. So those become some of our challenges in order to, you know, meet any of our refinance needs, or can you qualify without any of the rental income? And sometimes the rental income is negative, so it's hurting us. So I might not want the tax return in the file, and I might just want your W-2. So as a mortgage person, if I have all your documents, is when I kind of analyze things and decide, like, what is in your best interest? Am I taking it as strictly you're using your own income, or is there rental income potential? Or maybe you're self-employed and I'm like, hey, our next tax return, what is that going to look like? Maybe we should wait until, you know, we file taxes. So there's a lot of strategizing that goes along with any of the financing of any of the property.
Right. I agree. I often look at the short-term rentals as a one room hotel, almost, where it's a business. It has to be set up as a business. With that in mind, we have a lot of out-of-state investors from all over the country who look to do business down here in Southwest Florida, but they don't often have a team. So obviously, we're going to recommend each other. But what are some of the things that, if you're from out of the region, that you would look for when you're looking to start your investment journey? And how do you identify who the best partners are in the region?
I always like to, once again, work with people that specialize in that thing. So for example, I know you specialize in investors. You know, some of the realtors specialize in luxury homes. You know, some of them specialize in just being the first-time home buyer. So always finding your person that knows what you are really actively, truly trying to do. You know, what's your return on investment? some realtors would have no idea how to answer that question. They'd be like, yeah, it's a good deal. And we're looking like it is not a good deal at all. Like, you know, when I start trying to do the math and I'm like, well, if you could only rent it for $1,000 and your mortgage payment's $1,200, are you here to lose money? And that's always something I like to kind of point out the captain obvious to people. And, you know, what are we really doing and what are we trying to do? And then, of course, then it becomes, you know, the insurance people, you know, okay, here's some people we recommend for insurance. They're going to make sure that if there is a problem with our hurricane season or flooding, you know, they're responsive. It's not a, you know, a big Allstate situation where you're calling into an 800 number. You know, these are real people that live here that, you know, we do business with and always want to make sure that the client is taken care of. And the same thing with the title company. We recommend a few title companies that are always having investors' best interests in mind versus, you know, a churning, you know, title company that they're just about numbers. So I think having that whole team really focused on the investor having a return on their investment, and then a smooth transaction.
Yeah, I agree. I think you mentioned the key word, which is local, and not just, you know, that they live here, but they're active in the community. Because Cape Coral, as an example, it's growing very quickly into a large city, but the active players in here, the ones who are actually doing volumes, the ones that are actually really connected, we see each other all the time. I mean, you and I see each other at least 2 times a week in person. We at least have an email going back and forth per day. Same with the title company, same with the insurance companies. The ones who are really, really active in the space all know each other. It's an interweb. And there's times where, as an example, where you would, like, I'll get a pre-approval letter from someone who did one of those online and it's brutal because you're talking to someone different absolutely every single time. They have no cadence of responding to you. It's a huge web of individuals. I've had somebody, as basic as it sounds, I put the address for North Fort Myers. They responded, do you mean Fort Myers? I'm like, no, I mean North Fort Myers. And again, those are incredibly obvious things that if you don't live here and you're from Idaho, you may not know the different cities. You may not know the small intricacies of the area. So, and I'm sure you could attest, you get so much more joy when you work with someone who you had a great cadence with in the past. Would you agree with that?
Oh, I definitely would. And I think it keeps your reputation. You want your reputation to be good. So you're always going to be doing the right things also. So that's a big deal for me. You know, always do what you say you're going to do, meet expectations, exceed expectations. And then also if something's going south, admit it, you know, just be like, not every deal is going to go perfect and there's always going to be problems, you know, so it's all about managing the problems and being a problem solver, not a blamer. You know, I will never throw anybody under the bus. It's always like, what do we need to do to make this deal work? And then sometimes they just can't. So we all have to be like, everybody tried their hardest and there was problem ABC that was unforeseen. And, you know, then we move on to a different property. So those are always things that are keeping everybody in mind, you know, their feelings, their money, you know, the whole situation.
All right. With equities way high, I mean, the last 3 years, we've seen a lot of equity in people's properties, which is obviously a great thing. The subject matter of refinancing has become super, super important as people look to take cash out to possibly buy another property or to hold on to when there's a better opportunity. Don, can you walk us through what you look for when you're looking to do a refinancing? What's the first step and kind of what can you walk us through the process as a whole?
Yep. Usually I like to ask somebody for their mortgage statement up front. So if they don't have a mortgage, great. We know we have plenty of equity.
Almost
But otherwise,
automatically.
no mortgage, we got money. But I want to see, what does the current mortgage look like? And then we have a couple simulators that we can pop in addresses to give us like an idea of what a value might be. Sometimes you'll get a property inspection waiver, meaning that Freddie Mac or Fannie Mae agrees with the value I have in the loan system and we don't need an appraisal. So if somebody has plenty of equity and they're at a magic number that the system likes, there'll be no appraisal. Otherwise, we're going to go off of the appraised value once we have it. So if we're doing a cash out refinance, you could do 80% of the appraised value as the new loan amount. So subtract any mortgage you may owe out of that money to determine how much we can actually pull out. And, I always like to do the math. The first thing is, here's the math of what a refinance might look like. And then somebody might say, oh, well, for that rate, and I'm only getting 5,000 or 10,000, maybe I don't want to do that. I'm like, well, how about a rate and term, And then I do a rate and term. They might be dropping PMI. They might be getting out of an FHA mortgage into a conventional, and then the rate's lower. And, I want it to make sense. So if your closing costs are, say, on average $5,000, we want to make sure that we're going to recover that cost in probably about 2 or 3 years is what I usually like to make it break even at least. Because systematically here in Florida, historically, people tend not to hold on to their properties as long as they do up north. So I don't know, what is the average? Do you know, as the realtors, is it 7 or 9 years or something, maybe 3?
Well, it's funny. One of the challenges we have in today's market is people aren't selling, partially because they have no other place to go. So it's
the stats are off.
but we tend to be a little bit more transient, yes, where people are less locked in. And there's also so many opportunities to upgrade that you're always looking. If you didn't have a pool now, well, you want to pull the next one. So
I'm guilty. I just bought a new house.
There you go.
I got a pool.
Yeah, so one of the common acronyms that investors use is called BRRRR, which is buy, rehab, repair, and repeat. And so in that process, there's always 2 glaring flaws that I find, and maybe you can spot some more. But one is you have to pay closing costs again. So the money you cash out, it's not free. You have to pay a little bit. It's not usually a ton, but there is a cost there. The second is that when you refinance, you're now refinancing at a much larger amount. Well, you're doing cash out refi. And so when that happens, it means your mortgage also goes up. So if it's a rental property and you were cash flowing, you have to double check that you still are cash flowing, because it's not free money. You just decided to pay it off over the long run. Do you run into other issues when it comes to individuals looking to refinance? Maybe they thought something was possible and it turns out that it's not?
I don't know if it's that it's not possible, but like you said, I always do like to do the math, have it financially make sense. And then sometimes people might use a cash out refinance to avoid some capital gains. So say you have a property with a lot of equity in it, and you feel like you're probably going to sell it in the next year or 2. I'll have people pull out the maximum amount of cash. So when they sell it, you don't have that big capital gain on there. Yes, you did pay closing costs, but you just managed your gain in a different way, and maybe even putting it into a 1031 exchange.
That's so clever. So let's dive a little bit deep. I've never heard of that before. Let's dive a little bit deeper. So when you take your money out in equity, that's not taxed. But then when you sell the property, and this is a property that you haven't lived in the last 2 out of the last 5 years, so it's usually an investment property. And so when you sell it, you're looking at the difference between your current mortgage value, your current mortgage, right, your balance, subtracted by your sales price. And then that's what you would pay the capital gains tax on. And so if they're pretty close to each other, you may not pay anything. Is that correct?
Correct. Yeah. So I have people, savvy investors, that once we start getting a lot of equity, like we do, to just pull it out, and then they'll use it for something else. It was funny. I was just watching the news about the Warren Buffetts of the world, how they don't show any money on their income tax, but they leverage all their properties, all of their assets, things like that, lines of credit. So this would be just a way to not show so much profit, at the end of the day, because you had already had it financed. And then when you sold it, you only made 50,000 instead of 150,000. And then you would manage it that way with your HUD statement. And then I'm not very versed in the 1031 exchanges, but I know a lot of our investors with the Midland funding like to take that money, place it into a 1031 exchange to buy another property, and whatever those timeframes are.
Yeah, we're doing a number of those. And one of my biggest regrets was actually getting out of a lot of properties. But there are a lot of investors who don't like their current markets, or they're getting much older, and they love the idea of investing in Florida because appreciation's going to keep going up. We're seeing a population surge, and all these trends are set to continue for the long run. So with that said, I know you have a young daughter that you're very proud of. A lot of times when we work with investors, they don't know what to think of actually living here themselves or raising a family. So as a proud mother, what's it been like for you raising a daughter in Florida? And are you afraid that she's going to get bitten by an alligator?
Well, we do have an alligator in our neighborhood. He's about 5 feet long. He keeps showing up on everybody's ring outside their house. So yes, love living in Florida. The all year long fun, that's the way I look at it. Even if it's a little chilly, you're still out riding your bike. You're still out doing outdoor activities. There's always beaches close by. There's always barbecues. There's always family getting together, friends getting together. So I absolutely love it. I grew up in New Jersey, and I had a great childhood. And then I lived in Michigan before I got here, which was very, very cold for me. And then I lived in Hawaii for 5 years. So I'm used to that tropical weather, which I love. So everything about bringing your family down here, and especially now that people could be remote workers. I think the pandemic has really opened up a lot of possibilities for people that thought they could never do their job except in New York City or Detroit or wherever it might be. So now they have the opportunity to come here, get a house, and we're seeing a lot of big houses. People are looking for big because they have to put the office in there, and then they'll work from home. They become disciplined at doing it. And it's just like, hey, I'm going into my office, shut the door, do not disturb on the outside. I'm at work. And then, 4, 5 o'clock, you come out, you walk your dog, go in the pool, go for bike rides. It's just, it's so fun. And, our school systems are really bringing up our school systems. I don't know that they were always as good as they are now, but especially here in Lee County, we have a brand new high school coming that's going to house 2,000 students. So that's a pretty big deal. And all of our schools, they've, put a lot of funding in them to make them pretty good for our students.
Yeah, I'm from New Jersey as well. And for me, it's just having options, right? Just having, if it's January, do you want to go kayaking? The answer is you can, right? If you want to. We don't often go to the beach as often as you think we would, given that it's only a few minutes away, but it's an option. It's right there. You can barbecue in February. It's not a problem, right? You have a pool, the community, there's options and things to do. And as a father myself, like I love the idea of raising a Florida kid, right? I want him to know where other beaches are. I want him to know about fishing. I want him to be a lifeguard when he's 16. These are things that for me is much more exciting than teaching him how to shovel snow.
Oh yeah, definitely. And I think all the kids right now, they're all figuring out like, where's their first job going to be? Is it the lifeguard? Is it working on a golf course? Is it working in Starbucks? So they're always very interested to see, what they could do, and just the opportunities, the different courses that we offer here that are not really traditional, that the kids can, find some different career paths that would not, be up north. And a lot of it has to do with the hospitality and golfing and communities like that.
Yeah, and I would say overall, specifically in Southwest Florida, we tend to attract a lot of people from the Midwest and the Northeast as well. We're getting a lot more from California and those regions, which wasn't as common, but it's definitely becoming more common now. But one of the things also, just like the thirst for life, we're not done living, right? there's a sense that people want to be more active here. They want to be friendlier. In fact, Cape Coral is actually ranked one of the most friendliest cities to live in. And so overall, I think it promotes healthiness, it promotes being active. Dawn, as we're wrapping up here, if someone wants to get in touch with you and learn more about getting a loan for either their first time home, for their second home, for a third home, vacation home, or investment property.
Or the 100 homes that they have.
Absolutely, which happens often with you because people build such a close relationship. What are some of the steps they can take to reach out to you and get to know you and eventually work with you?
Okay. I always like to let everybody know that everything about what they tell me is private. So, we work in a big networking thing. So that's always the biggest thing. Like whatever the client is coming to me is not shared with you or anybody else. So Confidentiality, big with me. Prior military, I worked at NSA. I had a top secret clearance. So I'm always protecting all the information, and there's always a lot of it. You know, it's like everybody's story has a lot of parts to it. So that would be, you know, kind of getting all the story together, and they can always call me at 239-464-9455. And then you could also, you know, reach out to you, Alvin, and get my email. It gets a little hard at don.houser@aemc.cc. People kind of mix it up a little bit, or just Google Don Houser in Florida loan officer. I'll pop up right away. So I'm up there in the rankings. So, you know, always accessible for our clients. You and I had one recently that it was like a Saturday night. It was a hot offer. I was sitting on the couch watching Netflix, and they're like, I need a pre-approval letter. So, okay.
Yeah, it happens. And you know, one of the things that I enjoy about working with you is you actually enjoy what you do for a living, right? You're actively involved, you're actively engaged. You want to help as many people as possible. And when you have that joy, it makes it so when you get those random phone calls at 10 p.m., right? It makes it a little bit easier, because especially, you know, when you know that they're looking to close, right? That's what you want. We always want to, you know, people who are passionate about buying investments or buying their home, like, you know, we become so invested in that process where sometimes people will apologize for calling me on a Sunday. And it's like, hey, if I picked up, it's because I wanted to hear from you. And there is a level of excitement in this world where we're not stuck in an office. You know, we can build very close relationships. Well, with that said, Don, I will have your information at the bottom of all the social media sites that I'll be posting this video. If you want to say bye, now's the time. See you, Don.
Bye. And Smokey says bye too.